Inflation is like a silent thief. It erodes your purchasing power over time, making the money you have today worth less tomorrow. While it's an inevitable part of the economy, you don't have to let it derail your financial goals. Let's explore practical strategies to protect your wealth from inflation and stay ahead of the curve. Understand inflation and its impact. Inflation occurs when the prices of goods and services rise over time, reducing the value of money. For example, if inflation is 3%, something that costs $100 today will cost $103 next year. While inflation might seem small, it compounds over time, eating away at savings and fixed incomes. That's why it's crucial to take proactive steps to safeguard your wealth. Invest in inflation-resistant assets. One of the best ways to combat inflation is by investing in assets that tend to rise in value as inflation increases. Here are some options. 1. Stocks. Companies often pass higher costs to consumers, which can lead to increased revenues and stock prices. 1. Over the long term, stocks generally outpace inflation. 2. Real estate. Property values and rental income often increase with inflation, making real estate a reliable hedge. 3. Commodities. Investments in gold, silver, and oil often perform well during inflationary periods as their value rises with increased demand. 4. Inflation-protected bonds. Treasury inflation-protected securities, TIPS, are specifically designed to keep pace with inflation, providing a stable and secure option for investors. Diversify your portfolio. Relying on a single investment type can be risky, especially during inflationary times. Diversification is key. Spread your investments across different asset classes, industries, and regions to minimize risks and maximize returns. A well-balanced portfolio can help cushion the impact of inflation on any one asset. Reevaluate your cash holdings. Cash is often considered safe, but it's highly vulnerable to inflation. Keeping too much money in a standard savings account can result in significant loss of value over time. To counter this, consider 1. High-yield savings accounts. These accounts offer better interest rates, helping your money grow faster than in traditional accounts. 2. Certificates of deposit, CDs. CDs lock in your money at a fixed interest rate, which can help offset inflation if rates are competitive. Increase your income streams. Inflation can stretch your budget, so having multiple income streams can be a game changer. Consider exploring side hustles, freelance work, or investing in dividend-paying stocks that provide consistent cash flow. This additional income not only cushions the blow of inflation but also gives you more flexibility to invest and grow your wealth. Cut costs strategically. While you can't control inflation, you can control your spending. Evaluate your expenses and look for areas where you can save. For example, 1. Buy in bulk to lock in lower prices on essentials. 2. Reduce discretionary spending, such as dining out or entertainment. 3. Optimize your energy usage to lower utility bills. These small adjustments can free up resources to invest in inflation-resistant assets. Protect your retirement savings. Inflation poses a significant threat to retirement savings, especially for those on fixed incomes. To protect your nest egg. 1. Invest in growth-oriented assets. Include stocks or equity-based funds in your retirement portfolio for long-term growth. 2. Adjust contributions. Increase your retirement savings contributions to account for inflation. 3. Consider annuities with inflation riders. Some annuities are designed to adjust payouts with inflation, preserving your purchasing power. Stay educated and adapt. The financial landscape changes constantly, and staying informed is critical. Keep an eye on inflation rates, economic trends, and market opportunities. Seek advice from financial advisors or use budgeting and investment tools to refine your strategies. The more you know, the better equipped you'll be to adapt and protect your wealth. Embrace the power of automation. Automating your finances can help you stay consistent in your efforts to combat inflation. Set up automatic transfers to savings, investments, and retirement accounts. This ensures that even during challenging times, you're prioritizing your financial goals and staying on track. Final thoughts. Inflation doesn't have to be a threat to your financial security. By investing wisely, diversifying your assets, cutting unnecessary costs, and staying proactive, you can safeguard your wealth and even grow it over time. Remember, the key is not to fear inflation but to prepare for it. With the right mindset and strategies, you can turn inflation from a challenge into an opportunity to strengthen your financial foundation.